Good morning, everyone, and welcome back to the Daily Hunt for Multibaggers here on this Saturday, November 22nd, 2025.
Always a pleasure to be here, folks. We've got some interesting data to chew on from yesterday, November 21st, fresh off the presses.
That's right. Our AI models flagged a few distinct tickers from a decent number of social media discussions. What's clear is that sentiment is pretty mixed out there, Brooke. We're seeing some pockets of intense optimism, but also some very strong cautionary signals.
Absolutely, Ethan. Let's dive right into our first candidate, Inspire Veterinary Partners, Inc., or IVP. Now, the user sentiment we're seeing is overwhelmingly bullish on this one.
Yeah, the discussions characterize IVP as a sleeper beast, poised for significant gains. Users are really hyped about their Q3 2025 financial results, pointing to a 7% year-over-year revenue increase and a 9.2% rise in comparable clinic revenues. They're also strategically expanding, hiring new vets, acquiring clinics, and even planning an online pet pharmacy launch in Q1 2026. Plus, the recent successful appeal against NASDAQ delisting is seen as a huge catalyst, a stay of execution that's expected to trigger a relief rally and maybe even a short squeeze. It's definitely getting a lot of buzz.
Well, Ethan, while that user sentiment is certainly enthusiastic, my KPIs are flashing some very bright red lights. Yes, the revenue growth is positive, and narrowing the net loss by 27% is a step in the right direction. However, we have to look at the bigger picture. The current price of 0.1212 is a drastic decline of over 98% from its 52-week high of $6. That's a severe erosion of shareholder value.
Right, but the community sees that compression as a major opportunity, believing it's undervalued.
Opportunity or not, Ethan, the company is still deeply unprofitable. We're talking about a net profit margin of nearly negative 77% and earnings per share at negative 38.0. These numbers indicate that despite the revenue growth, IVP is consistently losing substantial money. And then there's the debt-to-equity ratio, which is an alarming 410.607. That signals an overwhelming reliance on borrowed capital, which for an unprofitable company poses massive financial risk. The NASDAQ appeal merely buys them time. It doesn't solve these fundamental financial health issues.
So while the community's excited about future prospects and the NASDAQ appeal, you're saying the underlying financials just aren't there yet to support a sustained bullish outlook.
Precisely. The news and those individual numbers are positive directional changes, but they don't fundamentally reverse the dire picture painted by the core profitability and debt metrics. This isn't one we've rated before on the podcast, but based on the KPIs, I'd classify it as highly speculative.
Understood. For IVP, given the current financial state and high risk profile, our AI-generated insight for today would be to stay away. Next up, we have Strategy Inc., or MSTR. Now, this is a stock we've talked about quite a bit.
Indeed, MSTR has been flagged as stay away multiple times in the past, including as recently as November 21st.
And the social media discussions for MSTR really reflect what we've seen before. Many users are expressing shock and concern over significant losses, with comments calling the company total garbage and questioning its business model. The bearish sentiment is pretty overwhelming.
You know, Ethan, it's not just user sentiment. The KPIs confirm these concerns. The current price of $170.05 is very close to its 52-week low of $166.63 and a steep drop from its 52-week high of $457.22. That's a lot of value destruction. Plus, its beta is an exceptionally high 3.374, indicating extreme volatility. This stock's movements are greatly amplified, especially tied to Bitcoin's price.
Well, some might point to MicroStrategy Management claiming a 71-year runway and Mizuho maintaining a bullish rating, suggesting a long-term vision despite the current headwinds.
Ethan, that optimism is really swimming upstream against the data. News reports explicitly state MSTR stock trades down and Bitcoin prices are falling. That's a huge headwind given their strategy. And let's not forget the debt-to-equity ratio of 14.147. That's extremely high, showing heavy reliance on convertible debt to buy Bitcoin. User comments calling it a pyramid scheme, and even Peter Schiff suggesting the entire business model is a fraud really resonate with that high debt profile. There's even a warning about a potential JP Morgan's MSCI delisting, which is a serious concern for institutional interest.
So even with some long-term optimistic statements from management, the present data and the inherent volatility tied to Bitcoin, compounded by that debt, make it a very high-risk play.
Absolutely. The news and events reinforce the bearish outlook, showing that the risks highlighted by the KPIs are very much in play. The previous stay-away ratings stand firm.
For MSTR, our AI-generated insight is a clear stay away. All right, Brooke, time for our daily roundup. After sifting through the data and our insights, here's our compiled list for today. Investigate as buy. None. Investigate as cautious buy. None. Investigate as speculative gamble. Inspire Veterinary Partners Inc., or IVP.
And that's our deep dive for today. Just a quick reminder, this podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses. The market is a wild place, and knowledge is your best asset.
Well said, Brooke. Thank you for joining us on the Daily Hunt for Multi-Baggers. We'll be back on Monday with more AI-generated market commentary. Have a fantastic weekend, everyone.
Take care.